Are you a privately contracted employee and you can't quite qualify for a traditional mortgage loan? Well, the 1099 only loan program may be your best bet. Welcome to the Mortgage Mindset. My name is Trevor Otsuka. I am a multiple state licensed mortgage advisor with Streamline Home Loans out of Las Vegas, Nevada. And my goal is to be an educational resource for you, teaching you about various loan programs and real estate. All of my contact information can be found in the video description below. Please don't hesitate to reach out if you need help with a refinance or a purchase, and I will be more than grateful to help you out. If you find this content to be of value, please share the show, like it, subscribe to it, and let's get started. So you are a privately contracted 1099 employee and you are responsible for your own tax burden at the end of the year. And due to write-offs, you can't quite qualify for a traditional mortgage loan. So what are your options? What can you do? Well, a 1099 only loan program could actually be the solution that you need. So what is it? A 1099 only loan is a loan that falls into the non-qualified mortgage or non-QM loan category. Here is a link to a previous video that I made where I described the differences between a QM and a non-QM loan. Instead of requiring full tax returns, this loan would require 1 or 2 years of your 1099 income forms from your contracted employment. For documentation, you're also going to have to provide a year-to-date earnings statement, and underwriting will also require wage and earnings transcripts from the IRS. You can request these online if you don't have them readily available, and we're also going to request a copy as well through a third party just to make sure the ones that you provided us are in fact legit. Typically on these loans, investors are going to use what's called a fixed expense ratio, and what that means is that they're going to state that you have a fixed 15% or 10% or 20%, whatever it might be for the investor guidelines, that is your expense from your 1099 generated income. You can be a previously W-2'd employee that is now 1099 contracted. There is one caveat to this, however, and that is that your 1099 income cannot be less than what you were making when you were W-2. If your income happens to be declining, moving from W-2 to now being 1099, unfortunately, most investors are not going to approve your loan. This loan program can be used for purchases, for rate and term refinances, for cash out refinances. And I just want to make you aware that if you are in fact 1099, underwriting is going to view you as being self-employed. And it doesn't matter if you are looking at doing a full documentation loan or if you are looking to do a non-QM reduced documentation loan. Loan terms can be fixed rate, they could also be adjustable rate, and the term length for these loans typically will range anywhere from 10 years. You could even go all the way up to 40 years. Remember, because it's a non-QM loan, it is not restricted to being capped at 30 years. This loan type is best suited for independent contractors, traveling nurses, realtors, photographers and videographers, hairstylists, barbers, web designers, and graphic designers, just to name a few. Typically, people with this type of income will have a significant number of write-offs on their end-of-year taxes. So on paper, it appears as though they have very little qualifying income. This program is a viable option for you because it doesn't require full tax returns. Everyone's finances and business structure are different. Although you may be technically 1099, if you have an incorporated LLC, for example, with business bank accounts, then a program like a bank statement loan may actually be a better option for you. Speak to your mortgage advisor or reach out to me for guidance on which programs may actually be the right choice for you. That's it for this episode of The Mortgage Mindset. I want to thank you so much for tuning in for another episode. Like it, share it, subscribe to it, and I will see you all next week.